All right, everyone, we are now in the final hours of a global liquidity countdown that could redefine this entire market cycle. And by the time we finish this video, you'll understand exactly where to look for the first signs of collapse or the next major opportunity. Let's get straight into it. Today, we're talking about a single imminent decision from the Bank of Japan that connects directly to the price on your Bitcoin screen. Markets have priced in a near-certain rate increase, expecting Japan's central bank to lift its key policy rate to 0.75%, a level not seen in nearly 2 decades. This isn't just about Japan. This is about a fundamental shift in the engine that has fueled global risk appetite for years. I'm going to show you the precise, terrifying pattern that emerges every time they do this and why a specific price level is now absolutely critical. First, we need to understand the mechanism. For decades, Japan has been the world's primary source of cheap money. Traders and institutions practice the yen carry trade, borrowing yen at ultra-low rates and converting that capital into higher-yielding assets abroad like U.S. stocks, bonds, and yes, cryptocurrencies. It was a massive, persistent flow of liquidity into risk. But when Japan raises its rates, that math changes. Borrowing yen gets more expensive. Suddenly, the trade that fueled growth begins to unwind. Investors are forced to sell those global assets, convert the dollars back to yen, and repay their loans. That process pulls liquidity directly out of markets like ours. One analyst described it as flipping global liquidity from a gush to a grind. Now, here's where it gets concrete. What does this historically mean for Bitcoin? The data paints a stark and repetitive picture. Look at this timeline. In March 2024, following a BOJ policy shift, Bitcoin fell roughly 23%. In July 2024, another hike. Another drop of about 25%. Then in January of this year, after the last increase, BTC slid more than 30% from its local peak. We are looking at a consistent pattern of 20-30% declines following these decisions. If that pattern holds from current levels, we are talking about a potential move that could test prices significantly below $70,000. Analysts are openly warning to position accordingly. This is the immediate historical threat, but this time, the global backdrop is completely different, and that creates a massive contradiction that could break the pattern. Let me explain. While Japan is tightening, the U.S. Federal Reserve has been a cutting cycle. We've had 3 consecutive rate cuts. On one hand, you have Japan potentially pulling liquidity out. On the other, you have the Fed theoretically putting liquidity in. So, which force wins? Some argue these forces may cancel out, leading to volatility but no long-term macro driver for crypto. Others see a more bullish regime shift, Fed cuts weakening the U.S. dollar while gradual BOJ hikes strengthen the yen, potentially creating a sweet spot for asymmetric crypto gains. The market is utterly divided on this outcome. And this liquidity battle is hitting at the worst possible time for another overheated part of the market, artificial intelligence stocks. When safe yields spike, trillion-dollar tech fantasies become impossible to justify. AI equities have carried the broader market for years, representing a huge portion of global market cap, but they are built on future profit expectation. If the unwinding of Japanese capital pushes U.S. Treasury yields higher, making safe government bonds more attractive, the math justifying those sky-high tech valuations breaks down. Companies like Oracle have already seen their shares slump dramatically on earnings concerns. NVIDIA, Microsoft, the entire ecosystem is interconnected. If AI stocks crack under this pressure, the risk-off sentiment will flood into every correlated asset, including crypto. This isn't just a crypto story anymore. It's a global liquidity story with crypto sitting right in the crosshairs. So, with all this tension, is there any hope for a faster recovery this time? Let's look at the on-chain data for clues. The crypto market in 2025 has shown growing maturity beneath the volatility. We've seen a painful but necessary leverage reset in Q4, moving capital away from pure speculation and toward utility-driven sectors like tokenized real-world assets and stablecoins. This could provide a more stable foundation. Furthermore, Japan itself is undergoing a crypto revolution. The country just saw 120% year-over-year growth in on-chain value received, leading the Asia-Pacific region. Regulators are considering allowing domestic banks to hold and trade Bitcoin, a monumental policy reversal. This suggests a powerful structural bid for crypto could be building from within Japan itself, even as its central bank's policies cause short-term global waves. This brings us to the most critical question of all. What are the key signals to watch in the next 72 hours? First, to ignore the headline of the hike itself. It's almost certainly priced in. The real signal will be the BOJ forward guidance, their language about the pace and endpoint of future hikes. Any hint of an aggressive tightening path will be taken negatively. Second, watch U.S. Treasury yields, especially the 10-year. A sharp rise would signal the unwind is in motion and pressure is building. Third, and most importantly for us, watch Bitcoin's reaction around a key support level. Does it find a floor quickly, suggesting the selling is exhausted? Or does it slice through like it's not even there, opening the door to that historical 20-30% decline zone? In a liquidity famine, true scarcity becomes your most powerful asset. This is the moment your thesis gets tested. The coming days will separate reactionary trading from strategic positioning. Before we wrap up, I want to hear your definitive take. I know you have a strong opinion on this, so in the comments below, I want you to answer this clearly: contagion or contrarian opportunity. Do you believe this BOJ decision triggers a broader market contagion that crushes risk assets? Or is this the contrarian setup where the fear is overblown and we see a vicious rally once the news is out? Drop your one-word answer, contagion or opportunity, and let's see what the community really thinks. And if you're finding this level of connective analysis valuable, please do support the channel. It takes a tremendous amount of work to put this together. So if you can, hit the like button right now. It genuinely helps more than you know. And make sure you're subscribed to Crypto Daily so you don't miss our real-time breakdowns of what happens next. The countdown is on. We'll be watching every tick. I'll see you in the comments.